Hey guys, how are you? This is Dr. Cozette with My Financial Home Enterprises. Today, I want to give you guys a quick sneak into charitable contributions. I had a question from Mr. Sandifer in Long Beach, California today. And the question is, what is the cap on donation write-offs? The cap is typically up to 30% of our AGI, you guys. So what does that look like? First of all, we have non-cash contributions as well as cash contributions. Our non-cash contributions are things such as donations, clothing, household goods, arts, paintings, things of that nature. Those are non-cash things. We can touch those things, tangible items. We also have automobiles that we can donate as well. That is a non-cash contribution. And then, of course, we know we have our cash. That is, we're donating money to maybe Maui. There's a fund account set up for them. As long as it is a 501c3, there's a number, a tax ID number attached to it, where the IRS can cross-reference to see that this charitable contribution was given to this organization over here, and they are a 501c3, not for-profit organization. We have our churches. We have different organizations in which we can contribute to, but it is your due diligence to ensure that you've checked to confirm that they are a 501c3. All you guys got to do is head over to the Internal Revenue Service in the search engine, but in the search engine file up top, you can put in there 501c organizations or nonprofit organizations, and there's a way for you to check on the IRS's website if an organization is truly a 501c3. Okay, so we have our cash and we have our non-cash. The total that you can give to any charity or a combination of them is 30% of your AGI, your gross income. So how do we get to our adjusted gross income? Our adjusted gross income is calculated by the total amount of all income. That's the wages, that's the interest income. Those items are considered income. And then we're going to have a reduction. Say we have a reduction, maybe we have a business and we had a loss. Maybe we have rental property and we had a loss. Capital gains or losses. Those equate to income less the losses, gives us our AGI, also known as our adjusted gross income. All right, so just remember, typically the magic number is 30%. If you give to an organization, you want to make sure that you keep detailed notes, detailed records. You want to keep backup to support everything. That means if you gave cash, you better somehow have a tracker where maybe you deducted the money from your account or whatever. Get a receipt that you donated. If you give $250 or more, the organization is obligated to give you a letter. If you are giving to churches, you want to make sure that you calculate every time you give, so that when the treasurer of the organization of the church gives you your statement at the top of the year, you know that it's right. Or you go through your checkbook to confirm that they added in all of your tithings and everything that you gave to the church. Charitable contributions, you guys, don't forget your mileage. Track your mileage everywhere you go. The key to everything we do is accurate record keeping. Accurate record keeping. Okay, if you send me something and it says charity, $12,000, $10,000, no backup to support it, I'm going to ask. So here's another thing. When you guys give to these organizations, I said to get the backup, but a lot of times what I see when you guys give your clothing and things like that, get the little slip that they give you and make sure that you put the fair market value in there, as well as the date in which you gave to the organization. Other things that are pertinent that I need that you guys oftentimes leave out is, what was the date that you originally purchased the goods? What was the original purchase price? You giving me the fair market value, you telling me that, but you're not always telling me what was the original purchase date and what was the original value. Okay, sometimes we got to guess. We don't know all these things because we are sometimes given a big, we're giving bags away to Goodwill. We're giving bags away to Salvation Army. We're giving tons of things, and we purchase stuff at different times. Give an estimate. Give an estimate as to when you purchased it. Give an estimate on the purchase price. Okay. Assign a fair market value to it. All right. The fair market value is a lot lower than you guys think it is. Some of you guys come with these high numbers. Like, you know, doggone good and well that if you paid $300 for a pair of shoes, you know the Goodwill is not going to sell them for $100. Let's be real. They may sell them for 50, 40, 30. I don't know, but fair market value. Okay. I want you guys to always remember the person on the other end at the IRS is human. They're just like you. They're just like I. They know about Salvation Army. They know about Goodwill. They know the prices in those stores. They have a standard template, policies and procedures that they got to follow internal. So let's not try to slip anything by me. Y'all know I'm going to catch it, right? Okay. Anyway, back to charitable contributions, typically up to 30%, you guys. All right. Remember, we have cash and we have non-cash. If you have anything that's over $500 that you're giving me that's non-cash, I need to know who you gave it to. I need their address. I need the fair market value. I need the original purchase price. I need the original date. If it's a cumulative of dates, just give me a date. Give me a dollar amount, because I must put it in the return. If you have cash contributions, make sure you have the support that goes along with it. If you donated a car, you will get a special form for the contribution, the car, because that form has to go into the tax return. All right. Hopefully this was great information. You guys have an awesome and amazing one. You know, if you have questions about this and any other tax matters, don't hesitate to send me an email. I'm going to remind you again, we're at the end of the year. Make sure you guys get your tax planning session in. It's critical, it's vital, it's for you. Okay. Especially if you find yourself owing over and over and over and over again. By the way, Albert Einstein says that's insanity, because you're not doing anything about it. What can we do to change the trajectory, the outlook of our tax return? We don't want to give Irene, Robert, and Sam our money, right? We don't want to give the IRS our money. So let's get those tax planning sessions in. I will put together a detailed strategy on what you can do to change your plan. I'm going to give you 3 strategic steps, how to implement and execute. It does us no good if I give you the strategy and you don't implement, and you definitely don't execute. But I'm going to give you 3. This is what you got to do right now, today, by this date. And then I'll give you a few more tips. All right. You guys have an amazing one. Thank you so much for sitting and listening to this. Go on and take care, and make sure you document. All right. Take care.